We meet here at the NATO headquarters, facing the most serious security crisis in a generation.
I think that the president is going to Europe in the hopes of getting European countries to band together and show a unified front.
I think we just have to stay strong and vigilant in a tight coalition and focused on enforcement.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It is 9 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Thursday, March the 24th. Our top stories today. Turning up the heat, President Biden is in Brussels, where he's meeting with allies to discuss ways to pressure Vladimir Putin to pull his troops out of Ukraine. The US and European Union are close to a deal to slash Europe's dependency on Russian energy. A deal could be announced as soon as Friday. And Vladimir Putin and Xi Jinping have exposed the great illusion of capitalism. Some observers say that unless the US and its allies mobilize to save it, the second great age of globalization is coming to a catastrophic close. Welcome to Bloomberg Surveillance Early Edition. I'm Tom McKenzie here in London with Matt Miller and Kailey Leinz in New York. Anna Edwards is off. Kailey, let's start with you on an important day for geopolitics once again for these markets.
Absolutely, Tom. The question is, will the market look through or even recognize any of the geopolitical developments today? Because by and large, it hasn't been moving on headlines related to the war in Ukraine to the same way it had earlier on in the conflict. Now, as for how the session shook out in Asia overnight, before we get the Nato Summit, the EU Summit, the G7 leaders meeting as well, it was mostly a down day. The MSCI Asia Pacific Index snapping a three-day winning streak off by about 0.5%. One of the big drags was Hong Kong, specifically tech stocks in Hong Kong, and that was a move led by Tencent. That stock down about 6% overnight after it reported its slowest growth ever. The company literally declaring an end to an era of reckless growth for big tech companies. So that stock taking a hit as a result. In other asset classes, of course, we saw a bit of relief coming into the Treasury market yesterday, yields coming in, and that was reflected as well in Australia overnight. The two-year yield, the short end, really seeing most of the movement in about 6 basis points to right around that 150 level. And we continue, Matt, to see weakness for the Japanese yen. It is the fifth day down against the dollar in a row, weaker by about 0.4%, 121.67 where we sit. That is the weakest yen going all the way back to mid-December of 2015.
Yeah, I really think that yen story is huge and maybe also a boon for the Japanese economy, actually, if they can sell their exports cheaper. Take a look at what we're looking at here. The S&P futures rising after a day of losses. Yesterday, we were off 1.2%, and the cash trade now futures are up about 2/3%. The U.S. 10-year yield rising as investors let go of some of that debt. So the 10-year yield at 2.3535, pretty amazing level considering how far we've come and how fast. NYMEX crude up again today, but really little changed at 115.20 a barrel. Also still a relatively high level for NYMEX to be holding at, and Bitcoin as well. A risk-on indicator up almost 2% at 43,098. So we see a relatively high level there. It looks like a little bit of an everything rally today. Tom, what do you see in Europe?
Yeah, it's been a choppy session. We've made up some of the losses that were posted across the European session, but not all of them by any means yesterday. Losses yesterday, of course, gains of around 0.3% across the benchmark. Across the map, you're looking at gains of 0.4 over in Germany. The UK, the FTSE 100 up 0.3%. Here in Belgium, that, of course, is where President Biden is meeting with his European counterparts, NATO first, then the G7, then that European meeting, and, of course, watching for any response and any agreement, if there is one, on how to further wean Europe off that dependency on Russian oil and gas. The S&P, by the way, over in Switzerland, keeping negative at 75 basis points for their rate. That's not a big surprise, but, of course, strength for the Swissy, a safe haven within the crisis around geopolitics here. In terms of how things are breaking down across the benchmark gains, as I say, 0.2%. It's been choppy over the last few hours. The German Bund currently up 3 basis points, so echoing what we're seeing across the Treasury space stateside as well. Euro dollar 109, Brent crude up 1%. Again, the eyes focused on what is happening within the commodity space and the implications for European equities. And of course, the importance today of seeing the Russian market reopen after being closed for a record period of time, almost a month. But with all the caveats that just 33 stocks are trading and foreigners crucial within this market are unable to sell, you're seeing gains of close to 8%. Also reporting that the wealth fund of Russia has been supporting that market. The ruble is at 96. You're seeing gains, losses, I should say, of around 0.2% after the gains we saw yesterday on the backs of remarks by Putin that he wants to see rubles paid in exchange for gas. Sberbank, the biggest lender in that country, gaining 8%, and Gazprom, the biggest energy company, up 15%. But again, the caveats of the trading and the ability or lack of ability to trade this market over in Moscow. Kailey.
Yeah, you also can't short it. So certainly a large number of caveats as we see that market reopen, Tom. I do want to mention we did get a rate decision out of the Central Bank of Norway, the Norges Bank, raising its benchmark interest rate to 75 basis points, right in line with what was expected. But importantly, they also said the rate will most likely be raised further in June, and the policy rate forecast is higher than that in the December report. The Norges Bank now sees the key rate at 1.32% in the fourth quarter of this year, and the forecast indicates the rate around 2.5% at the end of 2023. Now, in terms of other central banks, we will get more Fed speak later on today. It will continue with Charles Evans, Raphael Bostic, among others, speaking as the drumbeat toward 50 basis points in May continues. We'll also get some U.S. data, including durable goods orders and initial jobless claims. And of course, as we've been discussing, a big day in geopolitics. President Biden is in Brussels for back-to-back summits, including the NATO Summit, which is getting underway now, the G7 meeting, and the EU Summit later today, Matt.
All right, let's get now more on President Biden's visit then to Brussels and the latest on the war in Ukraine, as well with our reporters in Brussels and on the ground in Poland and in Washington, D.C. We'll start with Anne-Marie Horton, our Washington correspondent. She joins us from Brussels, from the NATO headquarters there. Anne-Marie, what do we know about Biden's positioning as he goes into this, I guess, summitry is a word I've been hearing?
Yeah, it's a slew of diplomacy today, Matt, and it starts here at the NATO headquarters, which I'd just like to point out. The flags behind me, the American flag, is at half-mast today for the passing of the former Secretary of State, the first female Secretary of State, Madeleine Albright. But, Matt, when it comes to the president who just arrived in the last 15, 20 minutes or so, he was chatting with Jens Stoltenberg, the NATO Secretary General, as he's made his way into the headquarters. And the position of the United States was laid out pretty clear yesterday on his journey over on Air Force One with Jake Sullivan, his national security advisor, saying, one, there will be fresh sanctions on Russian oligarchs and lawmakers at the State Duma out of Russia today. And then second, there's going to be a lot of discussion in terms of European energy and its reliance on energy from Russia, notably Germany, Matt, which I know you know very intimately. More than 50% of their natural gas comes from Russia. And what the United States has been trying to do over the course of weeks and months is really just try to find these supplies and elsewhere. You can get LNG from America, Qatar, and other places. What they're trying to do is potentially loosen that hold that Putin has on Europe's economy when it comes to fossil fuels.
And Anne-Marie, given the reluctance of Germany, Hungary and others to go hard on this or go further, what is the prospects of a deal then between the US and the EU on this question of cutting exposure to Russian energy?
Well, you're not going to see sanctions on it yet. Germany's just not there. I mean, Olaf Scholz, the chancellor, was speaking at the Bundestag just yesterday saying hundreds of thousands of German jobs rely on that industry of Russian gas coming through. But at the same time, you saw the German economy minister, Robert Habeck, in Qatar over the weekend talking about the need to find new LNG supplies. The issue Germany has is they don't have any LNG terminals. They're quickly trying to build them. That will take months, if not years. So this is a very long process that Europe needs to have in terms of decoupling from Russia and how they heat their homes and put their lights on. When it comes to discussions we can get from a deal, it's whether or not and how the U.S. can help Europe just try to find supplies elsewhere, because it already, you see the door opening of President Vladimir Putin trying to play politics, as he's done sometimes in the past with natural gas, now saying that he will only accept rubles, especially from those countries that he deems, quote, unfriendly.
All right, thank you so much to our Washington correspondent Anne-Marie Horton outside the NATO headquarters in Brussels. Meanwhile, inside NATO headquarters, we are seeing world leaders assembling for a family photo. Before that meeting begins, we see Mario Draghi and Boris Johnson of the UK, among others. So let's now head to the EU Council in Brussels. Our European correspondent Maria Tadeo is there. And Maria, Anne-Marie was just kind of running us through the issue of energy reliance on Russia. What is the latest thinking out of Europe, specifically out of Germany, when it comes to that issue?
Well, before we get to Germany, we need to look at the loophole that yesterday Vladimir Putin was trying to put on the table now, saying, I'm only going to book payments if you pay me in rubles. If not, we're not going to do these transactions. For the Europeans, in many ways, this is a threat, but also they believe a way of piling more pressure on the continent. And the officials that I've been speaking with, they tell me, A, they're not going to do it because it means renegotiating a contract under the terms that Vladimir Putin lays out on the table. They don't want to do that. There's no appetite for that. Then secondly, they know the game plan here. What he's trying to do, of course, has been shut off of hard currency. So he's trying to prop up the ruble. The Europeans say they have no plans to do that. And then we just heard from the Estonian prime minister say, we're not going to pay in anything that's not hard currency, but also we should be looking at the creation of an escrow account. So that means that Vladimir Putin is not going to be able to touch money that we pay him to continue a war here.
What else can they do? I mean, we just heard Anne-Marie tell us something that we all know painfully well. Germany gets more than 50% of its gas from Russia. Now, if Russia says, we're not selling you the gas unless you pay in rubles, and Germany says, we're not paying in rubles, then I guess they're not getting the gas, right?
Well, but that would be up to Vladimir Putin, and it's the European Union that wants to force that decision from Vladimir Putin. That would make him a complete pariah for the European Union. Essentially, what they say is these contracts, the way that we sign them, they're in euros or dollars. To change it unilateral because you want to change them is something that we're not going to do. If you want to put Gazprom on the line as your big energy mayor that's not capable of complying with a contract, then do it. But the decision will have to come from Russia. It's Russia that has to make that breaking point. It's not going to be the European Union. That is their thinking today. Now, when it comes to what do they do, I mean, it's very clear to all of the Europeans that you don't switch off from gas that comes from Russia from one day to another. Even if we get a deal with the Americans this week, it's not going to be about the next winter. This is about 2 years down the line. But this ruble payment move, they see it as incredibly political. They say, we're not going to comply.
Of course it is.
If it's you that doesn't want to play by the rules, then you do it. Then you do it. Cut the flows then.
He's already not playing by the rules, right? He invaded a sovereign nation. So, I mean, this is the issue. They don't have a choice.
He has one, and that's and that's clear, Matt. But for the Europeans to say, okay, it's fine, we're going to accept this and take it in rubles, politically, something that they don't want to do. So at this point, they say, okay, it's down to Russia to make the decision. You want to cut the flows, you want to put Gazprom down the line, go ahead and do it, and we'll have to deal with the repercussions of this.
OK, Maria, today on the ground in Brussels, working through the European response, of course, to that dependency on Russian energy. Let's get the response then from Poland. Bloomberg's Aggie Cantrell is there, of course, monitoring the refugee crisis that continues on the border. And, of course, we know the president is going to be visiting Poland tomorrow. Aggie, what is the Polish response to what is unfolding in Brussels? What is the message going to be from the leadership in Poland to President Joe Biden?
So Poland is one of the European countries that is deeply hawkish against Russia. They see Russia not only as a security threat to Ukraine, but also a security threat to themselves. When I speak to Polish people here, they are concerned, deeply concerned about some of these airstrikes that have hit relatively close to the Polish border. And so Poland is not only dealing with the humanitarian crisis of over 2 million of the refugees that have come over the borders have come into Poland, but also they see it as a need for NATO to step up its commitment to its eastern flank and make sure that countries like Poland are going to be well protected against any sort of threat that Russia may pose to them.
Well, and Aggie, as we speak, the family photo has wrapped up at NATO headquarters. We see President Biden huddling with Emmanuel Macron of France as well as Boris Johnson of the United Kingdom. Of course, we will also be hearing from President Vladimir Zelensky. We'll be addressing this NATO summit. And this is really just the latest in a virtual world tour that Zelensky has had underway, speaking to the leadership of France, of Italy, of course, the United States last week. Has his messaging changed? What does he need given the situation on the ground in Ukraine?
The thing that Zelensky has pushed for over and over again, and it's still not going to happen because NATO is unwilling to cause what they think would be an escalation, is to close the skies, essentially create a no-fly zone over Ukraine. They do not want, NATO does not want to engage with that prospect because they think that it could pose an escalation. They are still pushing for more weapons from NATO into Ukraine, and it does seem like, to an extent, the Ukrainians, it's worth remembering that this war is a month in now, and the Ukrainians seem to have been putting up a much greater resistance than what people originally expected. Figures from NATO yesterday estimated that between 7,000 and 15,000 Russian troops have been killed in this war in just 1 month. And the upper limit of that, the 15,000 figure, that's the same amount as was believed to be killed in the Afghan war that the Soviets had in the 80s that lasted 10 years. So that's the real significance, is that while they're calling for the skies to be closed in order to mitigate the humanitarian crisis, from NATO's perspective, it may be that the Ukrainians can push the Russians back to an extent without the need for that additional support.
Yeah, and of course there is a question as to whether or not those NATO estimates are actually making their way to the domestic population within Russia, or if that reporting is a little different on the home front. Thank you so much to Bloomberg's Aggie Control reporting from a humanitarian center in Poland. Now let's get back to the markets, because there are stocks on the move in pre-market trading here in the U.S. Among the groups moving to the upside is actually a lot of the semiconductor stocks. You have Qualcomm higher by about 1%, Nvidia is higher by about 2%, and of course we had some interesting commentary out of Nvidia's CEO yesterday talking about potentially looking at Intel as a manufacturer for its products. So they say that journey to it becoming a foundry may be a little bit hard. As for some stocks moving lower, we're seeing a little bit of froth coming out of some of those meme stocks that have had a renaissance in recent days. The latest one is Lego. This is an EV charging company. It just went public last week via a SPAC merger. It was up 114% just yesterday. It's giving some of that back, though, down about 7% in early hours this morning. And the original meme stocks, GameStop, AMC, have had big rallies in the last 2 days, but they once again are moving lower this morning, each down by about 2%, Tom.
Okay, Kailey, thank you. Coming up, exposing the illusion of capitalism. We're going to speak with Bloomberg editor-in-chief John Micklethwait about how he thinks the West must save the second great age of globalization. And Andrew Bulls, Pimco CIO for Global Fixed Income. We'll work through the fixed income market with Andrew. Plus, we're going to be speaking exclusively with the South African President, Cyril Ramaphosa. That is live in Johannesburg. Stay with us. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Tom McKenzie in London with Matt Miller and Kailey Leinz in New York. Anna Edwards is off. Now, the conflict in Ukraine could mark a lasting change in the way the world economy works and the way we all live our lives. That is the argument made in today's Big Take, written by our editor-in-chief, John Micklethwait, and Adrian Wooldridge from Bloomberg Opinion. John Micklethwait joins us now in the London studio. John, it's a fascinating piece. You're a master, a craftsman when it comes to the history. What are the lessons that we can learn from the First World War? What are the lessons that leaders now, contemporary leaders, should be learning from the First World War and the ramifications of that conflict?
I think if you look at the First World, you could compare the First World War and the Second World War. At the end of the First World War, and certainly going in, you had the First World War came at the end of the first great age of globalization, where things were much freer than they are now. You could move people, capital, goods around the world. You didn't need a passport. None of the problems I had trying to get into Paris as a British citizen a week ago. All those things were there, and the whole thing came apart. And at the end of the war, or during the war, people never thought, people never presumed that this was going to happen. They thought that the world was going to continue to be a free trading place, but things grew up. At the end of the Second World War, there was a conscious effort led by people like John Maynard Keynes, who catalogued that first collapse. And they looked at the idea of creating a sort of bigger, more global world. Initially, one just focused on the West, because you had the Cold War, but one that grew from it. And what we worry about is you look underneath what is happening this time round. There's all the blood, there's all the focus on Ukraine, and rightly so. But the fact is these things matter in the broader world. In this particular case, you've got geopolitics has been moving against globalization, with China, I think, now even keener to go a little bit by itself, even keener to decouple. And you've got CEOs. Every CEO around the world is looking at Ukraine, looking at Russia and thinking, I can no longer have just-in-time manufacturing. I've got to think about just-in-case, which means bringing production back closer to home.
Well, and John, we've already seen a number of CEOs pull out of Russia beyond what they were required to do by sanctions, right? Making decisions that affect their own supply chains because they're concerned about political consequences. Are they doing that with Taiwan already as well, getting ahead of the possible next move from China?
I think if you talk to any big company privately that has got manufacturing in China and around the world, they are definitely making that decision. Not precisely on the issue about whether China does invade Taiwan, but on the basic idea that the world is decoupling and that they have to get ahead of that. And in some cases, it should be said, it's not just fear, it's also greed. You look at pretty much every market in the world, there's talk of creating national champions. Business people, as Adam Smith pointed out, amongst many other people, there's no better thing to have a market that you can get protected in. And so many people now are looking at what's happening in semiconductors, Kailey just mentioned that. You're looking at what's happening in energy, and they're thinking it would be much better, much safer for me to be there, protected by a government, and pushed forward by a government. And it's one of those things that you can never, once it's happened, once that shift in a mindset has happened, it's very, very difficult to push back. We begin our piece with a Londoner, a famous piece of John Maynard Keynes. It's a Londoner sitting in 1913. He's sitting in bed. He's ordering everything from around the world. He's using the new telephone. He's ordering goods from this place, from that place. He's thinking about all the different areas he's going to go. And he fails to notice at the bottom of his newspaper a small headline saying, Archduke to visit Sarajevo. And I think, being honest, I think if we all look back to how it felt a couple of months ago, most people thought we're coming out of COVID. People were looking, most business people were looking at the broader world. What was happening with Vladimir Putin in Ukraine seemed like a distraction at the time. Now it's come right to the fore. And once it comes to the fore, it's very difficult to deal with.
Yeah, and now it is at the fore, making the coming weeks critical. And you say in the piece that the cure to globalization's woes is not to abandon economic liberalism, but to redesign it. What should that redesign look like, and who needs to lead it?
Well, there are two things. I think, firstly, the biggest thing is to hang on to it. You look at Joe Biden, the thing which he's the biggest geostrategic mistake he's made, I've seen it myself. I watched Gina Raimondo go around Asia. You have there a very clever commerce chief. She was wandering around Asia talking about frameworks and other things. Every one of America's allies in Asia wants a trade deal. Right now, there's a possibility, I think, of doing a new trade deal with Europe. What Biden needs to do, I think, is to rethink national security. And rather than starting from the point that trade deals are the last thing he wants to do, he has to think that is the way in which you cement alliances. And he has to make the case to the American people that actually doing deals with the other great democracies of the world, and he talks a lot about an alliance of democracy, but he has no substance for that without things like trade behind it. And that this is actually an issue of national security. It's not just to do with union jobs, it's bigger than that. And that really is the big part of it. But yes, you can redesign globalization. You can redesign globalization so that companies do not avoid tax, so that you bring in things like environment. You can build back better, to use a glib title which some people use.
Bloomberg Editor-in-Chief John Micklethwait, thank you very much indeed on the need to rebuild and remake globalization, not to lose it completely on the back of this conflict. Check out the big take, of course, on your Bloomberg, as well on Bloomberg.com. Well worth your time. Coming up, Andrew Bulls of Pimco. We're going to talk fixed income. This is Bloomberg. This is Bloomberg Surveillance Early Edition, and here is what you need to know. President Biden is in Brussels, where he's meeting with allies to discuss ways to pressure Vladimir Putin to pull his troops out of Ukraine. The president has back-to-back summits with NATO, the Group of Seven, and the EU. He's expected to unveil tough new sanctions on Russia. The US and European Union are close to a deal to slash Europe's dependency on Russian energy. An agreement may be announced as soon as Friday. President Biden's National Security Advisor, Jake Sullivan, says there will be a surge of US supplies of liquefied natural gas to Europe. And Chinese President Xi Jinping has spoken with at least 8 world leaders in the month since Russia invaded Ukraine. There's one big omission, though, from his list: Volodymyr Zelensky. Xi may be reluctant to speak with the Ukrainian president since declaring he had a no-limits partnership with Russia's Vladimir Putin several weeks before the invasion. I'm Tom McKenzie in London with Matt Miller and Kailey Leinz in New York. Anna Edwards is off. And Matt, the US markets, as we weigh up the geopolitics that are unfolding within Brussels, and maybe a deal that comes to formation at the end of this week on the question of Europe and its reliance on energy.
Yeah, well, certainly it looks like a risk-on start, at least so far. We've got S&P futures that are still gaining right now, Tom, and you've got investors willing to let go of the perceived safety of government debt. So the 10-year yield is up to 35.90, a relatively high level there, and it's come very far, very fast. S&P futures are rising. I guess as investors get out of bonds, they're willing to put their money into equities. Not really into crude. We've seen NYMEX bounce back and forth between gains and losses. Not a lot going on in the oil patch, although it is at a relatively high level, 115.03 a barrel for Texas Intermediate. And Bitcoin is up almost 2% right now, 43,121. And that's just a decent gauge of the market mood, Kailey. So we know that it's been very correlated, and that means today's pretty risk on. What do you see in terms of pre-market movers?
Well, in correlation with a move higher in Bitcoin, you are seeing a move higher for crypto-related stocks like Coinbase. It's one of the outperformers in pre-market trading, up about 2%. Even though oil is flat on the day, you're also seeing a little bit of outperformance for some of the energy players. Hess is higher, as is Marathon Oil. It's up about 0.7%. And as I mentioned, semiconductor stocks also getting a bid in the early session, one of them being NVIDIA, which is higher by about 1.8%. The CEO, of course, yesterday talking about potentially using Intel as a manufacturer for its products. One stock moving to the downside, really a group of stocks moving to the downside, are those meme stocks that have enjoyed a recent renaissance. But after moving up 31% in the last 2 days, one of the original meme stocks, AMC, is moving slightly lower in early hours, just giving a little bit of that back, Tom, down about 1.6% before the bell.
European markets have paired some of the earlier gains. We're currently range-bound across the benchmark European Stock 600, Kailey. The German Bund is up in terms of the yield by 4 basis points at positive 50. And in terms of the euro, under pressure, 0.2% lower in today's session. Brent is up, well, it was up about 0.1%. It's now range-bound. You're currently looking at 121 for Brent. It's been a bit choppy in the oil markets. We'll have a look as well at what's happening in Russia, because Moscow's reopened its markets for the first time in about a month. A record close in terms of the time frame there for the Russian markets. The benchmark is gaining 5%, but with the caveats that just 33 companies are trading, foreigners cannot sell, and short selling is banned. The ruble currently is weaker by about a little over 1.2% currently for the Russian currency. Sberbank, the biggest lender in the country, gaining 3%, and Gazprom, the biggest energy company, up 14%. Matt.
All right. Now, it has been an incredible quarter for volatility, no matter where you look, but certainly in fixed income. We've seen the worst quarter for the Bloomberg U.S. Treasury Index since 1973, so in my lifetime. And in fact, global bonds, wherever you look, sovereigns, corporates, etc., junk, are going down, as is evidenced by this chart. If you're listening to us on Bloomberg Radio, I'll just tell you we've got a picture of global bonds across all different sectors, and they have had a rough 3 months. Joining us now is Andrew Balls, the CIO of Global Fixed Income at Pimco. And Andrew, I want to first just get your take on what this means. The horrible quarter that we've had for fixed income, does that mean we see a bounce back in the rest of the year?
Well, you start to see more interesting levels, that's for sure. So we've had a couple of years where you had the big gains during the COVID shock, normalization since then, and then now into the Russia-Ukraine war shock. But you're seeing 10-year treasuries looking, reasonable levels now. The German Bund has moved higher, after these years of negative yielding bonds. You're seeing 50 basis points for the 10-year. So yes, there's volatility. You've got to manage through the volatility. We think it's a time for being very careful in terms of your investment approach. However, you're now seeing these levels where there is protection against downside risks, and we've just published our most recent outlook. It's a very difficult environment. It's very hard trying to gauge the impacts of the Russia-Ukraine situation, supply chains, energy prices for financial markets. Central banks tightening, but we're starting to think about recession risks, the recession of 2023 or maybe even later this year. So it's a time when I think bonds will play a important part in your overall asset allocation, and the levels are now more interesting.
So Andrew, you and the team are starting to think about a recession as soon as the end of this year. Where does that leave you? Where do you want to be sitting on the curve then?
Well, I think, in Europe, you're closest to this Russia situation. In the baseline, the energy keeps, the gas keeps flowing from Russia to Germany, Italy, and others. But in an environment where that is interrupted, then you have much more downside risk. The good news is you're starting off post-pandemic above trend growth, so there's some cushion there, but there's risks. And then, looking at the shape of the yield curve in the US, the central bank in the US on a more aggressive rate tightening path, inevitably it raises questions about the growth impact. Yeah. And we saw in the last cycle the vulnerability of financial markets, equity prices, credit spreads in a period of tightening central bank policy. So that's another concern.
Andrew, you mentioned the shape of the yield curve. If we actually see an inversion when it comes to 2s, 10s, do you think that will alter the Federal Reserve's behavior?
I don't think so. I mean, Chairman Powell laid out, how they look at this, the shorter part of the curve where their focus is. But over time, inversion 2s, 10 has been an important thing to watch. But you're in this difficult situation, one we haven't been in for a long time, where you have an energy price shock. We call it anti-Goldilocks, negative for growth, but pushing inflation higher. And the central banks are going to have to focus on the inflation side. And it's the first time in more than 20 years that during a period of growth shock, you're not going to have central banks providing the cushion. They're going to have to focus on the inflationary impact, just because we started off already with high inflation coming out of the COVID period and the supply shocks. So, lay a new shock on this already difficult period of supply chain disruption, negative growth impacts, but positive inflation impacts. It's a difficult environment to be trying to navigate. Okay.
Andrew Bulls, CIO of Global Fixed Income at Pimco, on this anti-Goldilocks economy. Thank you for those insights. And Kailey, President Biden, of course, is on the ground for that NATO summit. Before we get to that, we're going to be speaking exclusively with the South African President, Cyril Ramaphosa. That is live in Johannesburg. Stay with us for that conversation. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the principal room. Coming up later today, Moderna CEO Stéphane Bancel. That's at 8:30 a.m. in New York, 12:30 p.m. in London. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz with Matt Miller in New York and Tom McKenzie in London. Anna Edwards is off today. Well, today, President Biden is meeting with European allies at an emergency NATO summit in Brussels. They're expected to increase economic pressure on Moscow. Around the world, however, the response to the war has been mixed. South Africa is among the countries which have so far resisted calls to condemn Russia's invasion of Ukraine. Let's now go to Johannesburg, where our Manus Cranny is standing by with a very special guest. Manus, over to you.
Katie, thank you very much. Yes, I'm here in Johannesburg. It's an investment day for the president, Cyril Ramaphosa. He joins us on Bloomberg. Mr. President, welcome. Good to see you.
Thank you.
So as you and I sit down, Mr. Biden steps off a plane, he arrives at NATO, oil's at $120. We had a commodity super cycle. It started before the war, but it's a huge alpha for you. How optimistic are you that this super cycle in commodities really holds and continues?
Yes, we're in a super cycle, commodity boom, and when it started, I thought it was going to taper down. Now, with what's happening in the world, I think we're seeing a resurgence. And for us, as a commodity-based economy, this is really great news because our revenues just go up. We're then able to put money to a number of issues, investment, capital investment, which has been going down over years. We're able to put money into social projects to address the question of unemployment and poverty.
But the world is grappling, your people are grappling with a cost of living crisis as well. I want to understand, and the global investment community want to know, the political capital that you have, will you deploy that to protect credit ratings or to deliver subsidies? What is the priority for the political capital you have?
Well, we've always sought to be balanced, even as we had a real inflow of revenue recently. Rather than put it all into social concerns, we decided to balance so that we can balance our books, we can reduce our deficit, but at the same time address the issue of social needs that our people have. So we create that balance and the country moves on.
Let's say to the bond markets go with you. They're with you at the moment. You've got a fair wind. We talk about political capital.
Yeah.
You have a neutral stance on the Ukraine-Russia war, as I understand it.
Yeah.
Is there pressure for you to hold a neutral stance? Is it a political pressure of history from the ANC? Do the people of South Africa support your neutrality?
Well, people of South Africa in the main, yes, do support the stance that we've taken. And the stance that we've taken is largely born out of our own DNA, a DNA that says resolve problems through negotiation, mediation, and try to bring people together. And that is how our democracy was won. And we now carry that DNA forward, even into global issues and conflicts. We believe they should be resolved through interventions of negotiation and mediation.
And I understand that that's your position. You said on Twitter last week, I've been approached to play a role in mediation within your BRICS standing. Did Putin ask you to do that? Who has requested your mediation skills?
When I spoke to President Putin, I told him that we were being approached largely by non-state institutions who believe that the experience that South Africa has can be brought to bear on this. So in my discussions also with President Xi Jinping, I informed him that we are being approached, but those approaches are slow in coming forward. And we are saying if approached much more positively, we are willing to play whatever role.
Does it take Biden to lift the phone to you? Has he, to ask you to mediate, to ask you to garner support?
No, President Biden has not called. So whoever would be willing to place a call to us, we would be willing to weigh all that up and see what role we can play.
The impact of neutrality can cost. You know, this position of neutrality can cost. The risk is this, that not tomorrow, not next week, that investment could be held back from you by the global investment community because of your neutrality. Are you prepared to hold that neutrality and take that risk?
Well, neutrality can cost, and fortunately we are not alone in all this. There are many others who've chosen the path that we have chosen. And the benefit of being where we are is that we can talk to both sides. It gives us that possibility, that optionality then comes to the fore. And the investment conference that we're having now, some in our country were saying investors will shy away from us. And in fact, we're seeing exactly the opposite.
So it hasn't, this neutrality stance hasn't cost you so far. can I push you a little bit? President Biden has gone so far as to call President Putin a war criminal. You are one of the few countries not to condemn Russia's invasion at the UN. Why?
Well, because the stance that we have taken is that we need to look at everything in totality, but also base it on the need for people to sit down and talk.
To mediate.
To mediate. Because I've often found that when you can play a role in mediation and getting people to negotiate, when you actually do attack them, it diminishes the role, the positive role that you can play in finding a solution.
I know that the rebirth of your nation was in part built by sanctions leveled against old institutions. Do you believe sanctions are the right road to get Putin to de-escalate? You've lived through sanctions.
We've lived through sanctions, and we advocated for sanctions because we were dealing with a system that was a crime against humanity.
But not, Mr. President.
But that, no, hold on. And everything else had failed. Many attempts have been made to bring the parties together, and it had failed. And that was then opted for as the last resort. Now, in this case, we are saying what we should be doing is to make all efforts to try and mediate this conflict. When I spoke to President Putin, he told me that talks are going ahead, and he thinks that they could possibly lead to a good conclusion.
Do you think he's in the mood to mediate? Is there a shift in the tone? Lots of people say to me, he's not in the mood to mediate.
When I spoke to him, he demonstrated to me that, yes, he is in the mood to have talks being successful. And I think any belligerent should be able to be willing to sit down, because war is costly on both sides. So he is in negotiations now, and he wants to see the negotiations succeeding.
Cyril Ramaphosa, thank you for inviting us today. We hope to see you soon, and for your time and your hospitality here in Johannesburg. The President of South Africa, Cyril Ramaphosa, on Bloomberg.
All right, Manus, thanks very much. Bloomberg's Manus Kearney there in Joburg with Cyril Ramaphosa, the President of South Africa, who says the people of South Africa, in the main, support his neutral status. Now, for more on the war in Ukraine, we're joined by Dr. Lindsay Newman, Director of Global Political Research at S&P Global Market Intelligence. Doctor, I wonder if you could first weigh in on what you heard from Cyril Ramaphosa there. He says people support his neutral status, and it's in their DNA because they believe that mediation and negotiation is the way to solve conflict. Shouldn't they then really be opposed to the Russian invasion of Ukraine?
Well, obviously, the president's taking a position as the leader of his country, and he's in the best position to comment on that and what he feels that his electorate, his domestic population suggests. And I think, really the headline for today, for those who are, just waking up now, is that this is a critical phase we're entering of the conflict. We're exactly 1 month into the conflict, into Russia's invasion of Ukraine today. We have, as you've already mentioned, Biden is on the ground in Brussels. There is an emergency meeting of the NATO, an emergency NATO summit. There is a EU Council session. And of course, Biden will be meeting with his G7 allies, all to deliver a message of we need to remain cohesive. We need to remain united, as has been the case thus far over this last month. And Jens Stoltenberg, head of NATO, has also conveyed that message. He expects further cohesion and unity around perhaps cyber efforts to support Ukraine on cyber, against cyber attacks, plausible cyber attacks, and plausible CBRN usage. But as we said earlier in the hour, there are potential misalignments between the U.S. and its European allies going forward.
I wonder what you think of the threat that Russia has made to the European Union, in a sense, right? Putin has said they want payments for their gas in rubles. We heard from our reporter on the ground, Maria, today or earlier, that the EU is opposed to that, saying that they won't pay. How does this standoff move forward?
Sure. Well, as I was already alluding to, there are misalignments here. there is this announcement of a potential energy deal. Ironically, not the nuclear deal with Iran to unlock Iran's energy, but in fact, we might actually see a U.S.-European energy deal in quite rapid succession in the next coming days to sort of alleviate some of that pressure for Europe. But, a key point here is that even if the conflict were to end today, we are not unwinding back to pre-February 24th. For Russia, our economist thinks the year ahead looks like a forecast contraction of 11% of their economy because of these sanctions and the corporate self-sanctioning. For Ukraine, it's immense, the potential economic contraction because of property damage and the massive outflow of working population and refugees, the humanitarian crisis, which has seen upwards of 3.6 million already leave Ukraine. So our economist thinks that's a 40% contraction, hitting the global economy through supply chain disruption and commodity price surging. Our pricing and purchasing team has called this the everything rally, really, that we're seeing, and inflation, historic inflation levels since 1995, really.
Lindsay, we have some lines crossing as leaders continue to meet in Brussels at NATO Summit. The G7 to warn, this is a red head across the Bloomberg terminal, the G7 to warn Putin against using chemical or nuclear weapons. Of course, this has been a warning from the US as well. That's been reiterated in the last few days, at least underscored in the last few days. And the G7 also set to warn against the use of these weapons. That takes me on to my question, Lindsay, which is about the various different scenarios, because the markets are trying to work out and game out how this could play out, all the different scenarios. And I know you and the team have been doing an analysis on this. So just map out for us the various scenarios, one of them presumably being the use of these kind of weapons and whether that's a red line for NATO intervention.
Yeah, so you're absolutely correct that we've been doing a lot of scenario analysis on our team. First and foremost, looking at the 6-month outlook, where we think escalation, the escalatory pathway is most likely, the most likely scenario for the 6-month outlook, although perhaps degrading over time as the likelihood of ceasefire increases. As you say, that escalatory pathway could potentially involve the consideration of deployment of CBRN. We've seen Russia do that in Syria. It's a very different theater, and I think that's the concern that Biden is bringing in his messaging today, as you said, Stoltenberg and highlighted yesterday. And of course, you're absolutely correct. That is a key question that the market is watching, alongside a host of other geopolitical questions, like are we seeing the emergence of a new U.S. foreign policy, a new approach? Will these partnerships between the U.S. and Europe last?
On the question of China and its role in trying to address this crisis, and of course we know that Beijing has been doing U-turns, essentially ebbing and flowing on its position, trying to walk these two contradictory lines on the question of Ukraine and the invasion. Is there a sense that Beijing can play a constructive role at this point? How do you see China's role going forward?
Yeah, absolutely. A key question here is China's role in the world. And of course, clients are asking us on a daily basis, what role China will play with the conflict. What does this mean for Taiwan? We have to keep in mind, and we're making this point very clearly to our clients, that China is facing a very important domestic year ahead. President Xi Jinping is going for a 3rd term at the National Party Congress this fall. So that is the key focus for China at the moment. Whether it can play a mediating role, it has suggested that is something that they'd be willing to do. But what China really needs to maintain is a stable outlook, a stable economic outlook, and the risk of something like the U.S. imposing or U.S. and Europe imposing secondary sanctions is really just not would not be what China is looking to do in this very important political year for it.
Okay, Dr. Lindsay Newman, Director of Global Political Research at S&P Global Market Intelligence, on the possible scenarios emanating from this continuing conflict as leaders, of course, meet in Brussels, NATO, G7 and the European Council for President Biden today. Then he moves to Poland tomorrow. The markets currently across Europe, range-bound, future stateside, pointing to gains. More Bloomberg surveillance is ahead. We're going to hear from the Moderna CEO and Leslie Vinjamuri of Chatham House, again on the geopolitics of the moment. Plenty more ahead. Stay with us. This is Bloomberg.